Welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one idea at a time, purely for education. Today we're exploring an expert advisor called Momentum Spread Strength Shift. It's built around an original twist on momentum. Instead of measuring how quickly price is moving, it measures how quickly momentum itself is changing, using a relative strength reading of a moving average spread. By the end of this video, you'll understand exactly how it reads the market, how it decides to enter and exit, and how the underlying code ties it all together. Let's dive in. Let's start with the big picture. Most momentum systems watch the rate of change of price. Momentum Spread Strength Shift takes that idea one level deeper. It watches the rate of change of momentum itself. The strategy first builds what we can call a momentum spread. That's simply the fast exponential moving average of the close minus the slow exponential moving average of the close. If you've seen a MACD line before, this value will feel familiar. It grows when momentum is building and shrinks when momentum is bleeding away. Here's the original part. Rather than reading that spread directly, the strategy stores it as its own evolving time series, one value for every closed bar, and then runs a relative strength index over that spread series. It subtracts 50, so the reading is centered on 0. The result is a bounded oscillator that swings between minus 50 and plus 50. When it's above 0, the recent changes in momentum have been mostly positive, meaning momentum is being persistently built. When it's below 0, momentum is being persistently bled off. Because it's bounded and self-normalizing, it behaves consistently whether you apply it to a currency pair, gold, or an index. This EA can run on any single time frame you select at test time. Nothing is hard-coded, so the same logic adapts to a 5-minute chart or a daily chart. It trades one position at a time, aligns every entry with a slower trend filter, and wraps each trade in disciplined risk controls built from the average true range. Who is this style suited for, in an educational sense? It leans toward traders who like trend-aligned, momentum inflection continuation, and who prefer a bounded oscillator over raw price events. Because the trigger is a zero-line shift rather than a price spike, entries tend to cluster around genuine momentum turning points. Remember, none of this is a promise of results. Every trading approach involves risk, and losses are a normal part of the process. We're here to understand how the mechanics work, not to chase outcomes. Now let's walk through the exact logic, step by step. Every decision uses only closed bars, so the strategy is non-repainting. The currently forming bar is used only to detect when a new bar has arrived. On each newly closed bar, the EA calculates the fast exponential moving average of the close and the slow one, then subtracts them to get the momentum spread. That single number is appended to a growing spread series. Once there's enough history, a relative strength index is measured over that spread series, and 50 is subtracted, giving the centered oscillator that lives between minus 50 and plus 50. The EA also computes a short exponential moving average of the oscillator, which acts as its signal line, and a slower trend exponential moving average of price, which is the directional filter. For a long setup, 3 conditions must line up. The oscillator must cross up through the 0 line, meaning it was at or below 0 on the previous bar and is now above it. The oscillator must also be above its own signal line, confirming the shift. And the closing price must be above the slow trend moving average, so the strategy only buys in an up-leaning environment. A short setup is the mirror image. The oscillator crosses down through 0, sits below its signal line, and the close is below the trend moving average. When all 3 agree, the strategy opens a single position in that direction. Risk management is defined the moment a trade opens. The stop loss is placed at the average true range multiplied by 1.3. The take profit is set at the average true range multiplied by 2.4. That's a reward to risk shape of roughly 1.8 to 1. As the trade moves in its favor by about 1 full ATR, an early break-even lock nudges the stop up to the entry, plus a small buffer, so the position aims to give back less if the move stalls. There are 2 more layers. An opposite shift exit watches the oscillator continuously. If you're long and the oscillator flips back down through 0, the trade is closed right away, and the reverse for a short. This lets the strategy step aside quickly when momentum strength reverses. Finally, a cooldown of a couple of bars sits between entries so the EA doesn't re-enter on the very next bar. One position at a time, always. Let's read through the meta editor code on screen. At the top are the inputs. FastLength and SlowLength at 8 and 21 build the momentum spread. StrengthPeriod at 14 is the RSI applied over that spread. Signal period at 5 smooths the oscillator into a signal line, and trend period at 100 is the slow trend filter. ATR period feeds the risk settings, with the stop-loss multiple at 1.3 and the take-profit multiple at 2.4. Now the heart of the logic. The line-building OSC takes the RSI of the spread series and subtracts 50, so the oscillator is centered on 0. The two Boolean flags describe the shift. Cross-up is true when the oscillator was at or below 0 last bar and is now above it. Cross-down is the opposite. Trend up and trend down compare the last close to the trend moving average. Look at the buy block. When cross-up is true, the trend is up and the oscillator is above its signal. The strategy calls open trade with true. The sell block is the mirror. When cross-down is true, the trend is down and the oscillator is below its signal. It calls open trade with false. Inside open trade, you can see how risk is placed. For a long, the entry is the ask. The stop-loss sits 1.3 ATR below, and the take-profit sits 2.4 ATR above before the trade.buy call sends the order. For a short, the entry is the bid, and the stop and target are flipped, ending in trade.sell. Clean, symmetric, and easy to follow. Let's bring the logic to life on this chart. Up top are the candles with the slow trend moving average drawn through them in blue. In the subpanel below sits the strategy's real engine, the momentum strength oscillator, our RSI of the spread, recentred, so its pivot is the 0 line. Watch how the oscillator and its signal line dance around that 0 line, because that's where every decision is made. Look at the first two candles. Price is sliding lower and closing near its lows. In the panel, the oscillator is well below the 0 line and heading down, which tells us the recent changes in momentum have been mostly negative. Momentum is being bled off, so the strategy simply waits. There's no reason to buy into that. On the third candle, price steadies and prints a small higher close. In the panel, the oscillator has turned and is climbing back toward 0, though it's still below it. This is the strategy getting ready, not acting. Now the fourth candle is the moment. The oscillator crosses up through the 0 line, and it does so from below its signal line to above it. At the same time, price is holding above the blue trend moving average. All three long conditions agree, and the buy entry marker appears. Notice we're entering as momentum strength shifts from net bleeding to net building, right at an inflection point rather than chasing a candle that already ran. The stop-loss is placed below, at 1.3 times the average true range, and the take-profit is projected above at 2.4 times the ATR, a reward-to-risk shape of roughly 1.8 to 1. As the next candles push higher, the trade moves in its favor. Around 1 ATR of progress, the early break-even lock lifts the stop toward the entry, easing the pressure on the position. By the sixth candle, price tags the take-profit target, and the long is booked as a completed illustration. Now the market rolls over. On the seventh candle, price stalls and the oscillator peaks and starts falling back toward 0. Momentum strength is fading. The strategy doesn't short yet, because the shift hasn't completed and price is still near the trend line. Then the ninth candle delivers the mirror setup. The oscillator crosses down through the 0 line, moving below its signal line, and price has now closed below the blue trend moving average. All three short conditions align, and the sell entry marker prints. This time the stop-loss sits above the entry at 1.3 ATR, and the take-profit projects lower at 2.4 ATR. The following candles fall steadily, closing near their lows. The break-even lock again trails the stop toward entry as the move develops, and by the 11th candle price reaches the lower take-profit target, completing the short illustration. Had momentum strength flipped back up through 0 at any point while we were short, the opposite shift exit would have closed the trade early, without waiting for the stop or the target. Step back and you can see the rhythm. The strategy is patient through the noise, and it only engages when the momentum strength oscillator makes a decisive shift across 0, confirms with its signal line, and agrees with the trend. That combination is what keeps entries anchored to genuine inflection points. Of course, in live markets, not every signal reaches its target, and losses are part of the picture. This walkthrough is a clean illustration of the mechanics, not a forecast of results. And that's momentum spread strength shift. We covered the core idea of reading the rate of change of momentum itself, how the momentum spread becomes a bounded oscillator through an RSI applied to the spread, and how a zero-line shift, a signal line confirmation, and a trend filter combine to define entries. We also walked through the ATR-based stop-loss and take-profit, the early break-even lock, the opposite shift exit, and the cool-down between trades. Remember, everything here is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries risk, and losses do happen. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss the next one. You can find more analyses over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.